It's Thursday, May 9th, 2024. Thank you so much for joining me today. I really appreciate it. Please make sure to like, share, subscribe, all that good stuff. Lots to talk about today. I printed up some articles, jotted down some notes. Feel free to comment on any of this. But before I do, I want to share just some thoughts on a video I watched earlier today from the Dave Ramsey show. Not the biggest fan of Dave Ramsey. I have nothing against Dave Ramsey, but I think he definitely has sold out a bit. But needless to say, the show today was a bit interesting. A caller called up, just had his car repoed. He witnessed watching his car being repoed right off his front driveway. His payment was around $600 a month. He was over $3,000 behind on payments, owed around $21,000 on the car. It's gone. He lost his job a few months ago. And I'm thinking about this mess. This is absolutely catastrophic for the average consumer. And this is what is happening now to the average consumer. 25, 30,000 car repos a day. This gentleman is just one of many that this is happening to every day. But I think about people who have no money put away, no cash reserves, who lose a job and now it's just a matter of time before the repo man gets the car. Think about this, $600 a month, probably $200 a month with insurance. It's $800 a month. And now no car, no job. And what do you do now to get a job, to get employment when you don't have a car? How do you feed yourself when you have no money saved up? This is happening now every day to thousands of people, and it's going to happen to millions of people. They're going to lose cars, no money saved up, no job, and no chance of getting a job. And this is a complete disaster. And I think about this individual, sounded like he was probably in his late 20s, early 30s. How do you get out of this? And we all know that this economy is going to get much worse. And you can go out there and you can get multiple part-time jobs, but people are going to be competing against a lot more people very soon. You've got people from all over the world coming after these part-time jobs. You've got people who are going to be getting hungry, who have kids to feed. They're going after these part-time jobs. It's going to get more and more difficult to get a good job. It's going to get more difficult to even get a part-time job. If you have a good job right now, do whatever you have to do to keep that job. It is going to be very difficult to find a good job. Most of the jobs out there are part-time. Most of them are low-wage jobs. Most of them have no opportunity to move up a ladder. It's dead end. And you're going to have to work multiple jobs just to pay the essentials at this point. But I'm just thinking about this individual and how many people are in the same boat. And it's happening right now as I make this video. Somebody's getting their car repoed. They're not going to, if they have a job, they're not going to be able to drive to work tomorrow. If they don't have a job, they now have no car. So if you know somebody who's had their car repoed or is behind many months behind, we're seeing more and more delinquencies, 30, 60, 90 days on car loans. We're seeing higher delinquencies with credit card debt, people not paying their credit cards. So this is going to get much worse. And this is telling you and I something, that things aren't as good as they're telling us. The economy is not well. The economy is not strong. The consumer is not as resilient as we've been told for the past 12 months. The money, the stimmies, has run out. And now the credit cards are running out. The jobs now are going to be running out. We're going to see more and more people laid off. So we have a real disaster on our hands. Make sure if you're working that you put that cash reserve away so that if there is an emergency, you don't have to go into panic mode. Going to get much worse, ladies and gentlemen. Now, getting into this first article from CNBC, weekly jobless claims jumped to 231,000, the highest since August. I believe they were expecting it to be 215,000. This is bad news, but it's good news for the markets. The markets ate this up today. And I believe it was Fed President Mary Daly from the San Francisco Fed. I believe she came out today and kind of juiced up the markets a little bit, saying, well, if the jobless claims keep getting bad or keep going in this direction, we're going to have to talk about cutting rates. And of course, the markets loved hearing that. And so the markets were juiced a little bit today by that news, and also by the news of these jobless claim numbers at 231,000. Dow Jones up 331 today. Get this, gold up $30 as I make this video, $2,353 for an ounce of gold. We are nearing again. We're getting very, very close to all-time highs again. Silver up 97 cents, 28.57 for an ounce of silver. Both of these two of the most undervalued assets on planet Earth right now, but they're also getting a little juice here today by the hopium that there's going to be cuts. But look, at the end of the day, gold and silver, they will go up, they will go down, there will be volatility, but at the end of the day, they're going to go up because no matter what the Fed does, inflation is not going away. The US dollar is in trouble. It is going to be under pressure. It is going to buy less. And gold and silver are not going away. So no matter what the Fed does, there's going to be volatility with the metals. They're going to go up, they're going to go down. But at the end of the day, they're not going away. And they're going to go up, and they're going to go up a lot more. Peter Schiff on the Hedge today. Rate hikes on the horizon, question mark. Says the market's belief that the Fed is going to succeed in cutting rates. He says this is pure nonsense. Think about it. We're not even near 2%. Markets at all-time highs. Home prices at all-time highs. Yes, there's been an uptick in jobless claims, but still we have unemployment at what, about 3.8, 3.9%, still extremely low. There is no way that they're cutting rates, and they know what's going to happen if they do. And I don't think they're willing to risk that. Another one from the Hedge, the missing piece of the puzzle behind the inexplicable strength of the U.S. consumers is $700 billion in phantom debt. Phantom debt. They don't even know how much debt is really out there. There's so much debt floating around that's unaccounted for, and now they're calling it phantom debt. Consumer credit card debt now $1.337 trillion, a record high. Yet the savings rate is a record low at 3.2%. How in the world will people ever save up for a house? How will people, if they cannot save money, how are they going to pay down their credit card debt? How are they ever going to put a cash reserve away? How are they ever going to be financially independent with a savings rate of 3.2%? Household debt. Student loan debt, credit card debt, home equity credit, etc. We're looking at over $17 trillion of household debt, $17.5 trillion. Phantom debt exists, it says. Buy now, pay later. This debt is not reported to credit scoring firms. We don't even know how much buy now, pay later debt is out there. But people who use this, buy now, pay later, 43% say they're behind, 28% said they're delinquent on some other debt. So much for the strong, resilient consumer, ladies and gentlemen. The consumer is extremely weak. The consumer is in big, big trouble. Yet we're being told daily, everything's great, economy's booming, consumer is wonderful, don't worry about a thing. It's time to worry, ladies and gentlemen. It's time to worry. It's time to take action. This is not going away. You are witnessing with your own two eyes and ears the decay of this economy and the U.S. consumer. Is consumer travel spending easing? Bank of America identifies new trend as travel companies miss earnings. You know, my opinion only, but a lot of people took their stimmies and they went and they traveled and they went to Las Vegas and they drank and they gambled and do whatever they do. The last place you need to be right now is Las Vegas. The last thing you probably need to be doing is traveling. People should have been saving. People should have been preparing. People should have been putting a cash reserve away. No, they were going to Vegas. They were partying. They were drinking. They were going to the Bahamas. They were going to Florida. They were going wherever. They were driving out here to Palm Springs and partying every weekend. The stimmy-funded experiences, it says in this article, are over. Low-income consumers are cracking. Many, in my humble opinion, as I look on social media, many of these people who were broke but had stimulus money were out traveling, acting like big shots, acting like this party was never going to come to an end. And now the big shots are in big trouble. Again, people should have been saving, preparing. Instead, they were out traveling and burning through this money. The STEMI-funded experiences are over, according to this article, and I 100% agree. Here's another one from the Hedge. Revenge travel peaked? Question mark. Airbnb pukes on travel spending slowdown forecast. First quarter earnings beat expectations, but weaker than expected guidance pushed the stock down 6.89%. Consumer spending on travel is easing, and it's going to ease a lot more. Why? Because, well, for one reason, credit cards. People are now tapped out. They've run up the credit cards as far as they will go. Some people have had their credit lines cut. Many people have maxed out. Many people have very little left, and they're choosing to buy food and pay utility bills versus getting an Airbnb now. Reality is now here, ladies and gentlemen. Reality is now settling in. And this is going to be a horrible, horrible summer for so many people. How many people could not even pay their taxes for 2023? How many people are not even going to be able to afford their air conditioning bill this year, their light bill? How many people are behind? We have, what, 43% of small businesses couldn't even make their rent payment last month. We're in big trouble. And, people can sit there and watch their baseball games and watch their football games and, ignore all this. And if you can do this and you can afford to do this, God bless you. I would hope that you would take your time and money and spend it somewhere better than with these professional sport organizations, because they hate you. But most people are in big trouble. And, it's really the people at the lower end here who are really going out and spending. The weaker consumer who was getting all the free money. They were the ones that were really out of control, going out, buying the Dodge Charger, taking the Vegas trips, all that nonsense. And people just don't want to take responsibility and control their spending. Just kind of like the United States government. We're completely bankrupt and broke. We're still spending money. People don't even have a job, but they have a credit card. They're still out there spending. They're still buying stuff on Amazon. They're still, taking a Vegas trip, and they have no money. And people think everything is good because people are out there in Vegas, or, people are at the airports, or, somebody's at an Airbnb, or the restaurants are full. A lot of those people don't even have a job at this point, but they have credit cards, and they're just going to run it to the very, very end. And that is about the dumbest thing you could do. Rivian loses $1.45 billion as cost-cutting measures continue. Year to date, Rivian down nearly 52%. They've lost $38,000 per vehicle in the first quarter. How is this company even existing at this point? And how much government money did they get? How much taxpayer money went into Rivian and a lot of these EV manufacturers? These companies should be out of business at this point. The Hedge, to prevent a banking crisis, the Fed must cut. But, it says, 2009, 140 banks failed. Right now, in 2024, hundreds are in very, very big trouble, and they're failing right now. A string of small bank failures could spread into a larger bloodbath. The Fed is stuck between preventing a bank crisis and preventing inflation. If they don't cut rates, we're going to see a multitude of banks fail. If they do cut rates, you're going to see a lot more inflation. The Fed has got themselves in a big problem, a corner. And guess who created it? They did. Think about the bubbles that they've caused in the stock market with low interest rates, all the cheap money. They literally had interest rates for over a decade at nearly zero. Then they were buying mortgage-backed securities in a hot housing market, creating a bigger bubble. They're buying stocks, they're buying bonds. They have a balance sheet now that is nearly $8 trillion. The Fed itself is broke. We're in big trouble. I mean, you cannot make this stuff up. 43 million people in this country on food stamps. We're approaching $35 trillion in debt, nearly $200 trillion of debt if you include unfunded liabilities. 2035, they're telling you that they're going to have to make massive cuts to your Social Security because they robbed it and the money's gone. Where is it? Who's accountable for this? Why are more people worried about a baseball game versus where their Social Security money went and who robbed them? I can't even stress the importance of preparing mentally, physically, spiritually, financially, ladies and gentlemen. Just 4% of retirees say that they're living the dream, survey finds. This on CNBC. Only 44% say they've saved enough to retire. 4% said they're living the nightmare, not the dream, the nightmare. 4% living the nightmare. 44% said they're comfortable. 34% said that they're not great, but they're not bad. 15% said they're struggling. These are retirees. One factor to blame is the decline of private sector defined benefit pension plans. Less retirees have pension income to rely on. That on top of your dollar buying less and less. So when you have a fixed income and the dollar continues to buy less and less, and many of the comments yesterday were food, the cost of food and how it's really affecting your lives. It's affecting everybody's lives, and especially people who are retired, people who want a fixed income. It's food. Food was like the number one thing where people really, really said it's affecting their life. I would say, hey, health insurance, the cost of insuring your home, auto insurance, all this is huge numbers. But, the 44% said that they're comfortable, 34% said that they're not great, but they're not bad. This number right here can change very, very quickly because at some point when the Fed does cut, and I don't think it will be this year, but probably next year, when they get into when they feel enough pain, they're going to cut because that's all they can do. They're going to give them, you're going to see inflation go absolutely bananas. And this 44% and this 34%, they're going to be in very, very big trouble too. They're going to be with the 4% and the 15% because their dollars just are not going to stretch. Their rents will go up. Their insurances will go up. Their food costs are going to go up, all on their fixed income. They're going to be in big trouble. And so this is why people are going to be working till they die, because they just cannot afford to retire. You might have been able to retire 5 or 10 years ago. Things have changed over the last few years. And if they don't do something very, very quickly to cool all this down, get people back to working, manufacturing, producing things, forget the 4-day work week, get younger people back to work, get people back to the office, let's get innovation going, cut taxes, all this. If this does not happen, and of course, if this government doesn't stop spending trillions of dollars like it is, we're going to be in very serious trouble. And I hate to say it, I think we're in very serious trouble right now. Hedge fund boss loses legal fight over 2,364 silver bars found in World War II shipwreck. I'm going to close with this. I thought this was interesting. And again, so important to be owning real assets. 7 decades later, the silver is still intact and more valuable than ever. I think it has a price tag of around $40 million. An undersea exploration company backed by a top hedge fund boss in the UK lost a major global legal fight over the salvage of $40 million worth of silver bars from a ship that was hit by 2 torpedoes shot by a Japanese, I believe it was a Japanese submarine. 2 torpedoes. The South African government argued it still owned the silver, and the UK Supreme Court agreed. So this was found in the Indian Ocean, and South Africa said it's ours. They won the court decision. But think about this. Over 7 decades ago, and the South African government says that's ours. And people call this stuff a barbarous relic. It's just a rock, gold, silver. It's nobody wants it. You shouldn't buy it. Yet the South African government wasn't going to let it go. And this hedge fund manager invested a lot of money. Now they are going to pay this exploration team money for the recovery. They didn't disclose how much that is. but they're not going to get the silver. They are going to get some. They are going to get some money for this. But think about governments. You know, they know the importance of gold and silver. This hedge fund boss knew that it was very valuable. And just think, over 7 decades in the ocean, and this stuff is worth $40 million, a lot more today than when the ship was sunk. That's the beauty of this stuff. It's really indestructible when you think about it. Gold and silver, it's really indestructible. You can melt it. You can put it in the ocean for hundreds of years. It's still going to be worth more than the day it was made. It's worth more, or let's put it this way, it still buys the same as it did over 7 decades ago. It still buys the same as it did 5,000 years ago. Probably more now as times are going to get worse. It's going to have more purchasing power than ever. I think it's going to do more than just keep up with inflation, because I think it's going to be sought after, like these central banks and these governments and the South African government fighting to keep it. There's a reason why, because this stuff is valuable. It's real money. And I think this is another reason why everybody should own some of this stuff. It's unhackable, untrackable, untraceable, and it really can't be destroyed. A fire cannot destroy it. The ocean couldn't destroy it. Father Time couldn't destroy it. It's worth more now than ever before. And this is why hedge fund bosses are trying to find it. This is why governments are fighting to keep it. This is why central banks continue to buy it. So think about maybe adding a little bit to protect your wealth, not to get rich tomorrow. This isn't a gamble. This isn't crypto. This is to preserve and protect your wealth. So think about that. It's not financial advice, but just something to think about. I'm going to leave it there today. Give me your thoughts. Again, anybody you know had their car repoed? Anybody you know behind on payments? Are you behind on payments? Share it with us. What's going on? I'd love to know your thoughts on this. And if you have a story on this, if you're a repo man, if you're in the business, let us know what's happening in the repo business. How busy is it? Have you ever seen anything like this before? Credit card debt exploding. Delinquencies with credit cards exploding. Auto loan delinquencies exploding. And we're seeing more people with mortgages late on those mortgages. It's going to get bad. This is just the beginning, ladies and gentlemen. We're not even in the summer yet. And I believe by the end of the summer, this is going to look much, much worse than it does right now. It's bad right now, but we're not even close to how bad this is going to get. So make sure you're preparing. And that means put the cash reserves away, buy some assets, work some extra hours, get an extra side hustle, whatever you got to do. Pay the debts down. Prepare for very, very difficult times ahead, ladies and gentlemen. I cannot stress that enough. You know it. You can feel it. And you have friends that are already sharing stories with you how bad it is. I've had more people in the last few days tell me that more of their friends or family members are coming to them to borrow money. Have you had any experience with that? I personally have not had any issues with that. But have you experienced somebody, a friend, somebody at work, a family member, asking you for help, asking you for money? Let me know your thoughts. Have a great day. Like, share, subscribe. As always, I look forward to speaking to each and every one of you very, very soon. And until tomorrow, God bless.